Today, I want to break down a fast-growing AI company that many people believe is a real competitor to Palantir. In fact, their own CEO has even stirred the pot and said that a company like Palantir provides maybe 5% of the functionality that their solutions do, which is a pretty bold statement. To add to that, they work with clients like 3M, Raytheon, and the US Army, and they even have partnerships with Google, AWS, and Microsoft, which is pretty impressive. That said, the stock is currently down over 70% from its all-time highs just this year, and when you add all of this up, I think that this is a company that's worth taking a deeper look into. What's up everyone, my name is Coleman, and in this video, we'll be taking a look at C3.ai, ticker symbol AI. With that said, here's the format. First, I'll go over the company, their history, and some of their products. Next, I'll go over 3 of the bullish arguments with C3.ai. And finally, we'll take a look at 3 of the bearish arguments with this company. So let's waste no time and get right into part number 1, which is what is C3.ai? Well, C3.ai is an enterprise artificial intelligence or AI software company that provides software as a service applications for enterprises around the world. Interestingly enough though, they were actually founded by billionaire Tom Siebel and a few others in 2009 to be an energy company, which is where they initially put their focus. That didn't last long though, and 2 years later they decided to rebuild their software and pivot towards the Internet of Things and utilities market. They had much more success with this, picking up customers like Engie, Con Edison, and Origin Energy. So in 2016, they actually changed their name to C3IoT before changing it to C3.ai in 2019. Note that for the rest of this video, I'll just be calling them C3. Since then, the business has really evolved and expanded as they've been able to apply their software to a variety of industries. And today, C3 works with companies in manufacturing, oil and gas, banking, government, and precision health, just to name a few areas. So there's a lot of versatility in their product offerings, which I'll get into. Now, what exactly C3 does can be quite confusing to people, similar to Palantir, but simply put, they help companies organize their data, run predictive models, and overall make better decisions with their data. C3 offers a variety of solutions to help with this, which are all supposed to be easy to use and involve very little code, and out of these, Suite and applications are currently their core solutions, and right now they generate almost all of their revenue from these 2 products, so I think they're worth going over. First, they have their core technology called C3.ai Suite, which is a platform as a service that lets customers build and operate their own AI applications, or they can just use C3's existing applications, which is another one of their top products. C3.ai applications are basically a bunch of pre-built SaaS solutions that can quickly be installed and deployed by companies. Now C3 has 40 different applications, which all have different uses, but for example, they can be used to optimize your supply chain, forecast demand, identify fraud, or help with smart lending. So there are a lot of different uses for these applications, which helps explain why they now have customers across so many different industries. For example, C3 works with companies like Baker Hughes, 3M, and Raytheon, as well as government agencies like the US Army and Air Force, so they have a wide range of many well-known customers. They have also recently been signing partnerships with companies like Google, Microsoft, AWS, and Baker Hughes. This is currently one of their go-to-market strategies, and the goal with these partnerships is to either gain expertise in these industries or get help from these companies with things like selling, developing, or optimizing their technology. For example, Baker Hughes actually helps resell C3 offerings in the oil and gas industry, while companies like Google integrate C3's technology with their cloud platform, which lets C3.ai applications run on Google Cloud. Now there's probably even more I could touch on with this company, but without making it too complicated, that's just kind of a summary of their overall business. So what are some of the bullish points with C3? Well, let's touch on 3 of them. For starters, one of the main reasons people are bullish on C3 is because of the industry they're in and their potential opportunity. They've said that their goal is to establish a global market-leading position in the industry like they did at Oracle and Siebel Systems, which was a company that their CEO founded that was eventually sold for over $5 billion. The difference though is that this market is an order of magnitude larger than either of those markets, so there should be an even larger opportunity for them here. For example, enterprise AI is a large, pretty fast-growing market, and according to IDC and Gartner Research, AI spending is projected to grow to $271 billion by 2024, which is more than 12% a year. More specifically, when you dig into the different segments they operate in within this market, over the next 4 to 8 years, enterprise software is projected to grow by 24% a year, Enterprise infrastructure software is estimated to grow by 7% a year, and enterprise applications are projected to grow by 12% a year. They've also recently just begun targeting small to mid-sized businesses as well, which could expand their opportunity even more given the fact that there would be so many more companies they'd be able to target. So overall, given that this is a growing industry still in its early stages, there's a large opportunity for a company like C3, which is one of the many reasons people are bullish on this company. Now, another reason many people are bullish on C3 is because of their management, particularly at the very top. C3 was founded by Tom Siebel, and he's currently their chairman and CEO, so they're founder-led, which is nice. To add to that, Siebel is a billionaire and was successful before founding C3. Previously, Siebel was the founder of Siebel Systems, which was a CRM software company that basically invented the CRM market and was sold to Oracle for $6 billion in 2005. So he has a pretty good history in the business world. Siebel's also won a variety of awards, such as Entrepreneur of the Year multiple times, CEO of the Year, and Most Admired CEO, to name a few. He also has an 88% approval rating on Glassdoor, and although I usually don't put a lot of weight into Glassdoor, he seems to be someone with a good track record that his employees really like. To add to all of this, Siebel currently owns over 10% of the company's stock according to his latest disclosure, so he has a lot of skin in the game, which is nice to see for someone who controls 66% of the company's voting power. He also only takes a $5,600 salary, and the rest of his compensation is in options, which means that he should have an incentive for the company to perform well. So when you add all of this up, many people really like that someone like Siebel is leading this company, which is another reason people are bullish on C3. The third reason many people like C3 is because of their business model. Currently, the majority of C3's revenue comes from subscription contracts that are usually 3 years long and non-cancelable and non-refundable, which makes their revenue much more stable and predictable. Yes, some of that revenue comes from a usage-based fee for suite and application usage, which is more volatile, but a lot of it comes from predictable subscription revenue, which is nice, because C3 doesn't have to go into the market every year and spend millions of dollars just to maintain their current revenue, while also spending more money trying to grow. This subscription model is also nice because with C3's land and expand strategy, they should be able to offer more solutions and increase their revenue per customer over time. Additionally, this business model should be pretty sticky as well. As long as C3's solutions are providing a lot of value for companies, most enterprises probably aren't going to have the desire to use another company or build their own solutions in-house, which should keep C3's customer churn low, making their revenue even more predictable. This is something investors like to see because it can help reduce the risk for them, and this is why their business model is one of the reasons why people like this company. Now, having said that, there are also some risks with this company, so let's touch on 3 of the bearish points with C3. First off, and one of the more common bearish points, is their customer concentration. The company only has 98 customers, which is risk in itself, and last year, 2 customers, which are Baker Hughes and Engie, accounted for 19% and 12% of C3's revenue, so over 30% of the company's total revenue came from 2 companies. Additionally, as of April 2020, C3 had 4 separate customers that accounted for 18%, 14%, another 14%, and 11% of their accounts receivable, which in total means that 57% of their accounts receivable are from 4 companies, which is also a significant concentration. Now, while this should be pretty stable given their business model, this is still a lot of revenue from only 3 to 4 companies, which is a risk. C3 also has industry concentration, and in the latest update 2 quarters ago, about 35% of their revenue comes from oil and gas companies. Now, with prices over $80 a barrel, this becomes an afterthought for many people, but since it's a cyclical industry that's prone to large swings, it is something to be aware of. To add to that, 14% of C3's revenue comes from industrial companies, which are also known to be cyclical, which means that about 50% of C3's revenue comes from cyclicals. So if they were to experience customer churn or a decline in usage during a down market, their revenue could be hit. Another bearish point with C3 is around the profitability. Since they were founded in 2009, C3 has lost money every year, and in the past 2 years, they've lost over $50 million each year. Considering they've only generated between $150 and $200 million in revenue in those 2 years, that's quite a bit of money to lose. Additionally, they're going to continue to spend money on sales and marketing and R&D, and because of that, many people don't see a clear path to profitability anytime soon, which is another bearish point that investors have. Lastly, and by far the most common bearish point with C3, is their valuation. Currently, C3 is not profitable, so we can't really look at their PE or forward PE. When we look at their price to sales, it's 21.5, which is pretty high. Even when you look a year out, they still would trade at about 15 times forward revenue, which is still high. For a company that does have some concerns like customer concentration and profitability, which is expected to remain in the red for at least a few years, the valuation just isn't very attractive right now, which is another bearish point with this company. With that said, thank you so much for watching, and hopefully you liked the video. If you want to see 3 stocks that I'm currently buying, which are all down over 30% from their all-time highs, then go ahead and click on this video right here, and I'll see you over there.